Hi, my name is Simon Marcotte, I'm President and CEO of Northern Superior Resources, which has been consolidating the Chibougamau Gold Camp in Quebec, which we see as the next camp to emerge on a global stage. We also own half of a company called On Gold, which is progressing well. I am here this week at the famous Beaver Creek conference and about to talk to Matt, the best-looking interviewer at the conference.
The famous Matt. Yeah, okay, good. You're smooth. Thank you very much. Good to see you, Simon.
Good to see you too.
Day two, the end of day two. I don't know about you, but I've spoken to a lot of people. Are you speaking to a lot of people? They want to speak to you?
They do. I don't know why, but they do.
Okay. What we're going to do today, folks, we're going to talk a little bit about, you've got a great thesis on gold, read it. It's really, really fantastic article. In fact, we'll put the link to your article on this write-up here. What are you hearing from the gold side of the investment community? Because everyone seems a little bit excited.
Yeah, so I mean, definitely the producers are making a lot more money, and that money will trickle down partly as dividend, but definitely into acquisitions that's going to come. And I'll point this out. If you look at the developers, the company like us, like Northern Superior, that have ounces in the ground, and you go back in time, if you take the value of the ounces that are in the ground and look at the percentage of that value to the spot value of that gold, over the last since 2001, the average has been about 3%. If you go back further in time, the average has been around 5%. Mm-hmm. And in recent times, we went down to 0.5%. So as gold is moving up now, obviously that brings attention to the sector, but as real rates will start going down, and if they go negative, as I'm predicting they will, everything is going to go crazy. But as the real rates are pointing down, it brings interest into the sector, and we're having this re-rate, and we're starting from a low of 0.5%. So if gold just stays where it is, and we're having this re-rate back to the long-term average, we're looking at a 10-bagger for the sector. But then gold is gaining momentum, and we may end up reversing. The pendulum is going to swing the other side, and we may end up going at 10% of the value of the gold in the ground, which we have seen around, I would say around 2003, 4, 5, somewhere around those years. So there's an enormous amount of value for the developers right now, and inevitably the money that the producers are making. By the way, the producers, if you take them as a group, they have depleted about 1/3 of their reserves in the ground over the past 15 years. So they need to replace that. So there's going to be a lot of money to be made in the space. And we're just at the beginning of it. I don't even think the game has started. I don't even think it's the first inning. We're walking into the arena, taking our seat right now. So gold has been doing well. As you know, I've put my head on the chopping block to talk about much higher levels than anyone is talking about. And I don't see how this actually doesn't happen. If you look into the 70s, the point I'm making is, when you look at a currency, you can look at it the same way you look at a stock price. If a company is doing well, you value the company based on the present value of the future profits, right? When a company all of a sudden derails, and it's not, they lose everything they have, the business is going sideways, then the stock is in free fall, investors will look at the book value of the company or liquidation value of the company. And that is also true for a currency. And if you look at a currency, it is the amount of debt that you have in a currency versus the amount of gold held as reserves. So the reserve of gold of a country is really the book value of the currency. And if you look at the last time we did have a reset, which was in the 70s, and you look at it today versus the amount of debt in the system today, gold would need to go to $24,000 an ounce to go to the same level as it did in the 70s. And I think there's a lot more reasons that can take gold much higher than the 70s. So when I talk about gold going to 30,000, I am convinced this is what we're going to see. We've seen financial tsunamis one after the other. I don't see why gold would be any different. It is the next tsunami that's coming our way. Now, last point I'm going to make about the macro thesis, because I know you want to talk about Northern Superior.
I'm dying to talk about Northern Superior, right? But I'm also going to be the voice of reason in here, in all of this. So that's the hypothesis, and lots of good rationale and backup. And you'll read that in the article, folks. It's a good article. But are you saying, because of the factors you mentioned, this is a straight line up?
No, of course not.
Right.
No, nothing is a straight line up.
Right.
You know. So, but here's a point that I did not talk about into the article, and I don't think that is fully appreciated by everyone. And that explains. And it's, you know, if you look at the gold price just recently in the last few weeks, why is it that all of a sudden it's starting to make its new high and it's breaking out again? Mm-hmm. So it comes down to how the system has been working for the past 25 years. If I ask you about what is QE, what is quantitative easing, and when did that happen, you will point out to QE of 2008. You will point out of QE of 2020 during COVID. Yeah, those are, you know, massive QE by the U.S. government, by the Fed. But what people tend to forget is that the world has been living and ballooning on this giant 25-year-long QE done by the Asian countries, especially China, right? Because when globalization started, the Chinese especially were quick to realize that when someone in the United States buys something from China, the Chinese government would print a renminbi and exchange it for the US dollar coming in order to suppress their currency and keep, you know, adding manufacturing capacity. So the Chinese then would own the dollar. If they want to earn a return on that dollar, they would need to buy a treasury with it. So that dollar would go back into the treasury and it would push up the price of bonds and reduce the yields. And that's been going on massively for 25 years, right? And that is the kind of bubble that pushed up all asset prices for 25 years. And what happens just a few weeks ago? So it's all about tariffs. The tariffs are pushing up the gold. And listen, I have this article out, as you mentioned. There are so many reasons, so many factors that are pushing up the gold price. But one of the reasons is the tariffs. And what happened a few weeks ago is that there was an exemption for anything below $800 was exempt from tariffs from China. That stopped. So now everything you buy on Amazon now is now tariffed. Yeah. And that like dropped the Chinese export to the U.S. You can look at that chart. That really dropped sharply after that, and that's why gold is all of a sudden making this new high again, picking up momentum.
How does China feel about U.S. Investing in the U.S. full stop in any category? Do they start to weaponize their own economy against the U.S. economy in retaliation, not just in tariffs, but in all aspects?
We would need a lot more than 20 minutes to dive into this, but
broadly, some big thing. People talk about U.S. Treasuries, right? For instance, there's one.
Yeah.
Right.
Yeah.
So what's the truth right now?
So the U.S. dollar has had this weakest 6 months of the start of any presidency, right? And that was part of the plan, right? It was part of the plan of their plan to lower and weaken the currency to bring manufacturing back. But I think it's going a lot faster than anybody expected.
Right.
And now with the rate cuts that are now almost guaranteed, I think the U.S. dollar was falling too fast. And that's why I think that the Trump administration decided to push off by a few months this new layer of tariffs that they wanted to add on top of everything to China. So it's really going really fast. So what's the end game? I'm not sure, but it's good for gold.
Right. So, well, let's look at some of the other weapons available. Sorry, weapons, that sounds awful in today's current climate. But what are the other tools available to the U.S. government that it may choose to deploy in terms of protecting its own economy and building some kind of growth mechanism into the economy as well?
Budget deficits have been another weapon, to use your expression.
We got to stop that.
Of the U.S. government. But the way I look at it too is, listen, the economy already after 8 months of these policies, and listen, the policies may ultimately work. I'm not making a call on that. They are risky strategies and pretty intense tools being deployed. I'm not making a call if those policies are going to work. The goal of those policies definitely have merit. I'm not arguing with this. But these policies have had real impact on the economy. And the way I look at the big beautiful bill was a big increase in deficit, similar to the bailouts that the economy needed during 2008 and during COVID. Mm-hmm. But the bailouts of 2008 allowed to fix the system, the confidence came back. 2020, COVID went away. This time, the same policies are just doubling down. So, listen, it may ultimately work. Again, I'm not making a judgment call on that, but we may not the administration may not be in a position to have another bailout in 12 months. They may not be in a position to have another bailout in 24 months. So then the Fed would need to be. So it goes really, really fast, pointing everything to gold at this stage.
I think it's an interesting time for the dollar. It's under a lot of stress. Obviously, some of it deliberate. But some of it caused by overseas players. I think you've got Russia, China, and however many 20-odd countries saying, well, let's maybe trade oil in a different currency. You've got things like, well, I think bankers are quite good, whether they're US bankers or others, in terms of gamification of the markets, productization of the markets. And I'm thinking specifically at the moment, the two kind of big topics of the moment, which is a digital currency and even crypto to a lesser degree. Do you think the US government can actually jump aboard and perhaps start to control those tools to maybe stay in control?
Yeah, definitely. So I've never been a Bitcoin fan. Dead wrong.
Mm-hmm. Yep.
But if the facts change, you change your mind. Mm-hmm. And the fact is, the reason I was never a big fan of Bitcoin is simply that Bitcoin is really, if we would adopt the Bitcoin to replace the dollar, to take the extreme case, it would be the equivalent of going back to the gold standard, which led to the Great Depression. It didn't work, right? And getting off the gold standard led to the biggest increase in quality of living, of standard of living ever. It took the most people out of poverty on this planet ever. And it led to the fastest development of new technologies ever, because new capital could flow easier to these new technologies. Mm-hmm. So getting off the gold standard was the right thing to do. Now, going back to it with Bitcoin, not the right thing to do. But if the administration decides that we're going to move this way, well, I'm going to get on board, right? Mm-hmm. Now, it doesn't mean that Bitcoin is going to go straight up from here. That's not what I'm saying. But they're definitely looking at this at a way to, as a tool to maybe get out of some debt, right? The Russians made some interesting comments about that recently, where they said they're going to put the stable coin and put the debt in and devalue it, right? So anyway, but the stable coin, a Genius Act, is really interesting because it comes back to the article that I put out at first saying, gold would explode to 30,000. And one of the point I was making in this article goes back to the financial crisis of 2008, where all the banks were going to go bankrupt unless the Fed was going to do something. So the Fed printed $3.6 trillion of money, put it into the bank's balance sheet. So to make sure that nobody would, panic, and the bank wouldn't survive, so people would just stop, going to the bank getting their money. So the Fed did not want this money to enter the real market, because that would have been super inflationary, right? So they parked the money into the bank's balance sheet at the Fed, and then the Fed started to pay interest on that money so that the banks would not take that money and lend it out, right? It makes no sense. If they're making 5% paid by the Fed, they're not going to lend out that money at 4% to someone who can default, right? So that money is parked there, right? And in Project 2025, which has been a cornerstone of the Trump presidency, they talked about finding a way to get that money into the real economy. They talked about forcing the Fed to stop paying interest on that so that the banks would lend it. And that, I said, if that ever happens, that will crash the real rates and it will bring down the real rates negative, which make gold to absolutely catapult. So it's happening already. The Genius Act, which is the whole law about the stable coin, says that the banks can now create their stable coin and back it by the dollar that's held in their excess reserves at the Fed. So through the Genius Act, the banks can take basically the value of the money that they have in excess bank reserves at the Fed and make it enter the real economy. That will definitely push down the real yields lower. So this is a big thing.
It's a big thing. It's a worrying thing, and it's an uncertain thing as well. Because I've got people who will argue the other side of that coin with you, and I think, what does that do for the bankers? What does that do for people wanting to deploy capital? They kind of want certainty. You know this from banking days. It's like, we want certainty so we can actually understand the rules by which we're playing, by which we try and make money, right? So I think I'd love to have a more detailed conversation with you on that one. I'll take you up on that one. Yes, please. But we've got very important drinks to get to after this, so I'm going to have to get straight onto your company. But best start and say, look, here's we know what your thesis is. It's gold. Gold is good. But let's talk about your business plan in short, if you may. Talk about the assets that you've got and the premise of what you're building there and why I'm going to make money if I back you.
Perfect. So two things. Northern Superior is the company I'm running. And Northern Superior had assets in both the province of Quebec and the province of Ontario. And you remember not long ago we did a spin-out company called On Gold for Ontario Gold. And we did not distribute those shares, which means that Northern Superior still owns half of On Gold. All those shares are on our balance sheet. And On Gold has two things. And the stock of On Gold, you will see just in the last few days, really went straight up.
Why? What happened?
So one of the assets that we have into On Gold is called TPK. TPK is one of the most exciting exploration asset that there is globally, and the geologists that know this project are extremely passionate about it. It is the North America's largest golden till anomaly. It is probably the world's largest golden till anomaly. We know the source is right underneath those tills because the ground around it doesn't hold gold. So the source has got to be right there. Yeah. And there's a historical drill hole that came out of 25 grams over 13 meters. There's a boulder and a property of 727 grams a ton gold. So very, very attractive. But we wanted to do things right. Although we had the permit to drill it, we always said we wanted to do it in partnership with the local communities. And the right thing to do is always the right thing to do. And that was proven right again. And we just announced an agreement with the Nibidimik First Nation. And we announced that we are finally drilling after several years of waiting.
Okay.
We're finally drilling. We're drilling right now. So that kind of brought back a lot of the excitement into this potential discovery. And then the second thing that we have into On Gold is the Monument Bay project. So Monument Bay used to be owned by a company called Mega Precious, which was acquired by Yamana for Monument Bay. And then, as you know, Agnico acquired the Canadian assets of Yamana. So we did a deal with Agnico where we got the asset and they got 15% of On Gold. And when we did the transaction, it was a total M&I plus inferred about 3 million ounces. But that was done historical about 10 years ago at a much lower gold price. We are remodeling it right now, and we have we see a lot of potential to increase that resource.
Yeah.
And we're also now just raised money to drill not only TPK but drill Monument Bay.
Yeah.
So those two assets now are getting quite exciting.
Yeah.
So that's On Gold. We own half of it. So the stock now is starting to pick up a lot of liquidity. Share price is getting back up. So moving now to Quebec, Northern Superior. So what we've been doing there is consolidating the camp of Chibougamau, right? The camp of Chibougamau we see as the next big camp to emerge globally. Yeah. We've seen Guyana, we've seen Yukon, and we've seen Finland. This camp in Chibougamau is already as big as the one in Finland. And all of these camps have a driving force. The driving force of Chibougamau will be IAMGOLD. IAMGOLD is doing excessively well right now, all reflected into their share price. RBC upgraded the stock this morning. Stock was up like 11-12% today. Flawless execution by the new management put in place not long ago. And they publicly stated several times that their next stop is to develop Chibougamau. So the fact that they're coming in and as the driving force, a bit like Rupert was being rewarded fairly because Agnico was in Finland. Same thing a little bit for us. So I think the market is starting to see that There's a driving force. This is a camp that's going to get on its feet, and we've had tremendous success with the exploration program that we had. So our main asset, which is Philibert, we see as the starting pit of the entire camp. And we've been focused on that with a total of 22,000 meters of drilling, enormous amount of success to the southeast. We also discovered a high-grade underground zone at depth, and when we just bought the neighbor as well, and now we're going to focus to grow to the northwest.
Yep.
So a lot of expansion to come. There's a new resource in works. I don't have a timing for that yet, but it's coming soon. So a lot of focus has been put on Philibert, and also part of the acquisition that we made. The next door neighbor to keep expanding our deposit onto that property. We're also starting to think about, okay, this whole camp, at some point we need to see where a mill and the infrastructure, the tailings, where is that all going to be? And we see Hazur, that land, as a prime potential location for this, because it's higher ground, so it's really dry, solid rock, so that could be a good location to put that. So it's a very exciting camp that's evolving right now.
Definitely a lot of moving parts. I'm intrigued by the IAM Gold as the sort of driving force of a district and how that reflects in your behavior and your activity. How do you set this up so that you're a bit more in control of the time frame in which maybe someone like an IAM Gold comes along and does, works with you, buys you, wherever you go, and how do you kind of remain in control during that period? Because sometimes if you're playing a waiting game, the price doesn't move, your stock doesn't move. You've got to do stuff, right? You've got a lot of moving parts you've just described. So how do you remain in control?
Well, first of all, we can remain in control of the equity to make sure that nobody can steal the company. So just the insiders of the company, we own 25% of the company. So we've put a lot of money into this company.
Yep.
Second, we have very, very good institutional shareholders that see the value of what we're doing. But we're not just waiting around, waiting to see further M&A. We've been the hunter for a while. At some point, we may get the hunted. I'm in no rush to see this. I think you got the point that I'm bullish on gold. So the idea of selling too soon is not great. There's an enormous amount of low-hanging fruit and ounces that we can add. And the more ounces we add, the more valuable and the more strategic we become. And there's still a lot of low-hanging fruit for us to keep adding ounces, add strategic tucking land as well. But we're open for business. But I've been involved in lithium, for example, before, and we sold too early, and we regretted it. So it's just the early game of this whole thing. It was a pleasure.
Good to see you. Come and see us soon. Obviously, a lot going on at the moment, and I'm definitely taking up on the longer conversation about the markets, because that is a kind of driving force, not just for your company, which is, as you say, okay, we get it, you're into gold, but I'm interested in how that kind of trickles down and starts affecting the mining sector, and how it trickles down and affects developers and explorers, because that's when it gets super exciting, because the gold price in itself is enough. It needs a few other things to be moving around, and I think you've touched upon some of them in the conversation earlier. So appreciate it, Simon. Thank you.
Anytime.